Hi guys, so today we'll be talking about fair value gaps, FVG. Now what is an FVG or a fair value gap? A fair value gap is a gap, a massive gap created in a market which causes imbalance. So this is a technical analysis thing, so it's not based on fundamental, but definitely there will be a cause of that spike. The spike might be either up or down, but it's a massive spike, just one bar that has that so much spike that it gave gaps to the previous candlestick. So an example is something like this. Let's say the previous candlestick is this, then there was a spike downwards that was so long, right? There was a spike downward that was so long, and after that spike another candlestick came here, which is a bullish candlestick. Let's say this is a bullish candlestick, right? Now you see this space from here, this way, this is the lowest point of this candlestick, our previous candlestick, and this is the highest point, right? Now this one, this is our lowest point, this is our highest point. Now from this point to this point, that's from this highest point of our next candlestick to the previous one before this gap, the lowest point, that's this area to this area. Now this is an FVG. You know why? Because there's no candlestick around here, there's no wick around here, there is no wick around here. So price action created a fair value gap, which will definitely be covered, right? In most cases it will always cover that candlestick, it will always cover that gap it created. Now what happens next is that either the next candlestick or the next few candlesticks, depending on the time frame you are looking at, it will definitely keep going and go till it covers this fair value gap, right? So normally it's an imbalance in the market. And also how to trade a fair value gap is when you find a fair value gap on 4 hours, you have to check, scale down, make it a top down analysis thing. Check if you see it on either 2 hours or 1 hour time frame, you know. So, and if you also see a fair value gap on 1 hour time frame, you should also check if it's in correlation with 30 minutes and also 15 minutes. In most cases, when you have correlations of a fair value gap, that means it's a legit and also a very perfect fair value gap that will definitely be covered, right? And also on the monthly and 1 week and also 1 day, you should check the correlation, mark those places, and just know that when price steps into a zone, let's say after this candlestick, now the next candlestick that printed was above this place or closed above this place, I would definitely want to trade this point from here to this point to get my profit, right? And also you have to also consider other factors. Is it in a support zone? Is it in a resistance zone? What are the candlesticks that are printing? Because sometimes fair value gaps take time to fill up, right? They don't just fill up immediately after creating a fair value gap. Sometimes it might take days, sometimes it might take weeks, depending on the movement. Is there news, is there an economic data that will definitely arise for these candlesticks to fill up? And sometimes the candlesticks that fill up a fair value gap, as I stated, this is a fair value gap, might not be candlesticks, it might just be a spike up. Let's say it might be a week, so price will drive down to cover that fair value gap, then it will now still keep going up. So it doesn't mean price will keep going up and cover and even pass there. No, sometimes now this is a week, right? This is just the highest point of the market, so the market drove just to cover this and it kept going down. So don't be caught up in just thinking that only one way will solve your, or rather only one way will give you money, without actually making different confirmations. So let's step into my chart and I will show you guys some examples of fair value gaps and some trades I took and why I took those trades, right? But fair value gap in all, it's a very good opportunity, especially when you understand it deeply. So I hope I made sense in this video. See you inside my chart. Thank you.
Hi guys, let's look at this recent
this recent FVG. This wasn't long time ago. Let's start from one. I'll identify like 3 FVGs, right? So let's start with this one. Let me mark this point. Let me mark it. Okay, get here, right? Now let's clone it. Let's So can you see where I put this, my blue arrow? From this point, this was where the wick of this last candlestick was. From this point to this point, it created an FVG. So where I put this blue arrow is where the fair value gap is. And look at what price did afterwards. Can you see, after still going down, it came back and covered this FVG. So this is just one example, right? And it's on 4 hours time frame. Let's even switch to 1 hour time frame, so we will see the correlation. Can you see? This happened on Friday. The FVG was created on Thursday and it was filled on Friday, as you all can see. It happened on Thursday 31st of October, and on Friday 1st of November it filled it up. This British pound, Japanese yen, it's always respecting fair value gap. Let's go to 4 hours. Let's look for another fair value gap. Look at these fair value gaps. See from here where my mouse is. Let's use this from here. In fact, from here to here, so this was even a huge fair value gap, because from here it started creating, but this particular candlestick is a whole lot of, and it's on 4 hours. So from here to here, and look at where price started retreating to cover that fair value gap. Though we consider other factors like the news, like the demand zone, looking at this 1st October example that we did about covering the fair value gap. Let me remove this ranging. But looking at it, it actually came down to our demand zone and it retraced back up. So considering with this demand zone and the fair value gap and the candlestick it printed, look at this doji here, right? I would have taken, and even if I wouldn't have taken it, after this bearish candle, the next one was a bullish engulfing, so I would have taken it. We'll consider other factors too. So looking at this fair value gap, this was a fair value gap that I've been looking at and I saw it. So but when you see, price didn't really retrace back down to this point, right? It didn't really retrace back down to this point. Look where price stopped. It was around here. Because I was following this trade, I even left the trade because I noticed price might not really come down to this point. But look what happened after a week. It still came down to cover that particular fair value gap. So you use other factors to consider fair value gaps. Look at the gaps it created, look at the imbalance, and what next? It started retracing to cover those imbalance. This one in particular. But yes, from here to this point I marked where the fair value gaps were. So let's still look for another one, and when we switch to our 1 hour time frame, we'll still find it there. So let's switch. Look, let's zoom. So I normally use correlation, right? Time frame correlation to know if it's a valid fair value gap. Look from where I marked it. This 1 hour time frame. Look at fair value gaps. Look at fair value gaps. Can you see? And did it retrace? Yes, it did. Can you see? Can you see? And when you switch to 30 minutes, you still find it. And when you switch to 15 minutes, you still find it. But I like using my 4-hour setup first, because 4 hours is like the top notch. Wow, look at this fair value gap here. Look at this fair value gap. Let's use this hour from here where our former week was. Let me switch this into blue so it will be clearer. Better, right? Where's the second one? I'll still have to so for each time there's fair value gap, just know that it's an imbalance and price always fill it up, no matter how long it takes, right? Price will fill it up. Look, from this point to this point, from where this I mark this blue to this point, this is a whole fair value gap here, right here, right? So what happened next? Price still came down, made a double bottom, a W pattern. And what next? W pattern alone should tell you that price is going back up. When you see a double bottom, W pattern too, it's about to make a W pattern. When you see a double bottom, look what price started doing. And you also consider some candlesticks, right? Engulfing. If I was in this trade, where I'll enter. I've already marked this my fair value gap, right? Yes, I could have entered through here, right? Take my profit, because sometimes market will take time before it covers that fair value gap. Just like my last example that I showed you guys, it took it 2 weeks to cover that fair value gap, but it went close to that point. You see, price retraced down to where it started. Price retraced down to where it started rising to cover that fair value gap. And when we look at obviously there was news and other time frames, and also don't be carried away. Most times some fair value gaps are already covering the former fair value gap. So it's not everywhere you see a fair value gap. Always look to your left to see if that fair value gap was covering another fair value gap, or it's a fresh fair value gap. But as you can see, this is a fresh fair value gap, because looking to our left, I can't find any fair value gaps around here. So this is a fresh fair value gap. So I'm expecting price to cover that fair value gap. Now after this double bottom, because like I said, this will be in news, right? After this double bottom, I already know that price will be heading back up. I'll be expecting price to cover my fair value gap, and I'll take my profit here. Already this place, I didn't know yet if it's my demand zone, but when price came here, it came down. Then I marked a trend line, because I keep updating my chart, right? So okay, looking at this now, you don't get this one wrong. This is not a fair value gap. You know why? Because it's covering, no, sorry, this is not a fair value gap. Don't get me wrong. So looking at this now, right? Look, price covered this fair value gap, right? Covered this this is not a fair value gap. It looks like a fair value gap because of the gaps in between, because of the gaps imbalance in between. But no, look to your left, it's covering this particular fair value gap that's already created, right? It has covered it. Now look to this one. This is a fresh fair value gap, and look at this green. Don't get it wrong, it's covering this former fair value gap. So there's something about fair value gaps, right? It can be confusing, so you have to actually take your time and understand it. I hope this video is making sense, and I hope you have an edge over understanding fair value gaps before now. Thank you.